The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show like we usually do, looking at the DAX daily. Yeah, well, actually 60-minute, and then we're also going to take a look at it on the long-term weekly because there's a possibility that we might have reached that big 1.27 ABCD pattern going over the past year and a half. Actually, well, it's 3 years, so it's a very, very large pattern in the DAX. Whether that's going to hold up or not over a long period of time, we'll have to wait and see. We have something going right now, folks. It's very interesting. We've got this E-mini here that's sitting right at a Gartley pattern. Now, this is only a 15-minute chart, and we're trading around 25.71, so we've gone a little bit below the 61% retracement already. If we break that, folks, we're looking at the ABCD pattern here. We went down 32 handles on the 9th of November, and if you take 32 handles from where we are at the high of overnight, 32 handles will take you down to about 25.55. Anything below 25.55, in my opinion, would be a game changer. That means that there's been a change in the continuity of thought and that the market might actually have 3 down days. It hasn't had 3 down days since September. That's the first time that's happened. But we'll walk through it as we go through each day at a time. We don't want to overextend our analytical ability because the farther out you go, the less sure these patterns are from my perspective, because I do really good on the short-term stuff. The longer term is a little difficult. Folks, I want to talk to you just a little bit about the webinar that John Jameson is going to give for us on Wednesday. John was one of the original people on the internet. I mean, what I've been going through this 2 hours a day for the last 7 days. He's been refining this program, but it's really interesting, and he basically has shown me why what we're looking at now in Bitcoin, and it's not just Bitcoin, folks. It's called the blockchain, and the blockchain is equivalent to what the internet was back in 1990. If you remember when we first started seeing things like HTTP/#, all that stuff, that's hypertext transfer protocol. That was the only thing I knew about the internet was that meant. I'd have no idea what that meant, but at least that's what it is. And what we're looking at with these blockchains is really amazing. This is for real, folks. So I would really highly recommend you listen to it. I've seen it so many times. I'm learning a little bit more. I'm certainly not expert. Boy, I'm the guy that doesn't even have a pocket protector. I'm about the last guy on the list for technical. I'm still not sure that microwave ovens are here to stay, but I have acquiesced to the color TVs. But this is really a superb way to look at this. I mean, he shows you how to use direct market information feedback that you get. I mean, it's just amazing the stuff that is out there that I had no idea. And it's just truly amazing. And I've done a lot of webinars in my lifetime, and this is probably going to be the best one you folks will probably ever see on something that is really the forefront of what's happening out there. John has been doing this stuff. His specialty is computer sciences. He's never worked for anybody. He's always been a consultant, and he works for some big companies, so he does understand it. He was one of the people right on the ground floor of the internet 27 years ago, and he's been on the ground floor of this blockchain stuff for quite some time. So I think you'll really enjoy it. And not only that, he's a really nice guy. And I was fortunate enough to work with him 15 years ago. He came to my office here and was supposed to spend a couple of days. He spent a lot longer than that because we had so much fun together. But I had a problem with artificial intelligence that I was not able to meet. I met him through a personal friend in London, and that I had trained, and John was wanting to get into foreign exchange trading, and so he came over to spend a few days with me. But I had no idea how smart he was until he was here about 20 minutes. But I was having a problem with my artificial intelligence program, that it was stuck. I couldn't get it to retrain properly, and I tried people at Neuralware. I tried the smartest people that I knew. Even Al Larson couldn't figure it out. And if Al can't figure it out, it's pretty much hopeless. And he said, well, let me take a look at it. And 20 minutes later, he said, here's your problem right here. I mean, it was just amazing. I mean, I just, all I can tell you is, folks, try to get to that webinar, because you're really going to like it. It's not easy stuff, and you might have to watch it more than once or twice. And I'm hoping that Tom O'Brien's going to latch on to John here, maybe get him on to some other things that he knows, because he really understands this stuff, and it's great. And I don't know if you know this or not, but Bitcoin trades 24 hours a day, 7 days a week. And so it's amazing, and it trades technically. Let me just show you how it trades technically. Now, this is where we were. I'm working with John here just the other day. I'll just get this up here. This was yesterday. This was Sunday. You'll notice here. Look at this. Is an hourly chart on Bitcoin. Look at this. 1, 2, 3. Look at that. It's a perfectly symmetrical 3-drive to a top pattern. The market went from 7,800 to 56 and change. It's now rallied back to 66 and change. But look at that 3-drive pattern. I mean, these patterns are all over this thing. So it's a real thing, folks. I don't, but Jamie Dimon and some other people says it's baloney, but man, I don't think so. When I look and see what it is, the problem is that they don't know. Yes, you can sell bits. These are things that you can sell Bitcoin short. Yes, you can get various margins. I'm not going to take this away from John, because it's too much. He's got this all covered. But the margin range from 4 to 1 to 20 to 1, and it's traded on different places that are like their Bitcoin exchanges, and it's really, Bitcoin is one wild market, Cam. You're right. You don't really need a lot of leverage, but it's an amazing thing. It is new. John says we are very similar to where we were in 1993 with the internet. And if you remember, it was around 1996 that we first started to be able to get some things that were good. We have a guy here in Tucson who's an expert in the internet, and I met him way back in 1996, 97, and he was just too expensive for me to use. But what he did was, before anything happened, he bought the names. He bought domain names, and the first thing he did, he bought all the sports teams' domain names. Chicago Bears, DallasCowboys.com. He bought all of those. Then he bought the major colleges. He bought all of them. He made a fortune off of that. And that was because he saw something that, was really different. But this stuff is probably here to stay. If not, then I get egg on my face. But I like eggs, so it's not a big deal. But I think you'll enjoy this seminar that's coming up on Wednesday. He's going to be doing it all. I'm going to be listening again. I've already seen it 5 times. Every time I see it, I learn something a little bit more. And I think you'll really, really learn something from it, and you'll certainly enjoy it. But it's the coming thing, boys and girls. At least that's what it looks like. 877-927-6648 if you'd like to call in.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart that we were looking at on Friday of the British pound. We were trying to, show you that this still had a bearish tone to it, and as you can see from the prices last night, it was really strange last night because we gapped down just about 10 or 15 pips, and we stayed there for about a half an hour, and then the market just got hit really hard, and it was a news announcement coming out of the UK that Theresa May's problem with Brexit was going to intensify, and some other things. She was losing more cabinet members, or whatever the politicians lose over there, just like they do here, I guess. And then the market broke really hard, and it was down almost 200 pips at one time. We're still down about 120. So this has certainly been a little bit of a game changer, in the British pound. Now, if we take a look at the U.S. dollar, which is primarily when you're looking at the euro, you'll notice that we had that head and shoulders bottom pattern that started back in August through September into October, and it's perfect cycles look good. In other words, from the shoulder to the head is a cycle, and the head to the shoulder is a cycle, and the two shoulders are equal. That's a perfectly symmetrical head and shoulders pattern, folks. These are the kind that Dr. Andrew Lowe put in his book with the formulas, because this is what makes it such a perfect symmetrical pattern. And you'll see what's happened since that time. Now, if this pattern is good, you can see we're going to get up to this 96 level. We're trading at 94.50 or something this morning. And whether we get this pullback here to 93.50 or not, we're not sure. But the goal is to see this head and shoulders pattern get up to the 96 level in the British pound. Now, we've had a sell-off a little bit in the euro this morning, but nothing like what happened in the British pound. And also the yen. The yen had another big move, doing pretty much exactly the same thing. So we'll watch these as we go through looking at some of these markets. Someone's asked the question, is this the top in the stock market? And my answer is what I gave to Mr. Z on Friday. Ask someone who knows. I'm not sure. All I know is that I'm watching it on a short-term basis, and the patterns, as you can see, that we posted here in the E-mini S&P this morning, were pretty much spot on. It was the same thing with the Dow Jones. You can see the Dow Jones is actually even clear because it's no longer the leader it's now lagging quite a bit. Its NASDAQ is still the leader, but you can see what's happened here in the thing. And if we get below, 2380, 280, this is going to be a failure in this particular pattern. But it did complete right down there where it was supposed to, and so far it's held that level. But it's still, the market hasn't actually opened yet officially, so we'll want to watch that. But there's a lot of things saying that it is. One of the things I wanted to bring to your attention is that we're over something very important here this coming week. And we've got a new moon coming in here on the end towards Thursday, which will have Norm Winsky on. He's our new moon, full moon man. We have him on twice a month because he's always got some great information. But you'll notice here in this Dow Jones Industrial Average chart, folks, starting back in August, look at the gaps. 1, 2, 3, 4, 5 gaps in the Dow Jones Industrial Average. I mean, that's never happened before in a period of 6 weeks, but it did this time. This is how markets usually end. They end with a great deal of exuberance or a total despair on the downside, much like we had in 2009, when the world was coming to an end and we had to give billions of dollars to our banks in order to keep them from failing. What was good about that is if you get near failing, all you have to do is ask the government to help you, and they will help you out. That's how it works. So it's a good deal for everyone. All right, let's move on to a question that someone's had about the Dow Jones transportations. The transportations are a totally different scenario, because look at this. You see the Dow Jones Transports made a 3 drive to a top pattern, back in October. It was actually October the 15th. And we've been down quite a bit since that time. We're down well over 4 weeks. So we're coming right in to a very important 61% retracement here in the transports at this 94.20 level. Now, if we get below 94.20, that's going to be pretty negative, because that means it's breaking the 61% retracement, and that tells us we'll probably drop another 100 points or possibly more. But this pattern that you're looking at here, that big ABCD, that 3 drive pattern going back from March of last year, that's a very, very powerful pattern. And, that's the standard pattern that we look at when we watch all these things. And that could mean that is, potential for, a major top. But again, the key word there is potential. Someone asked a question about the Apple. I still think Apple is really interesting. The one that looks most interesting today, folks, and this might happen this morning, pay attention to this one here. This is a really interesting pattern. Look at this is a daily Microsoft pattern, and look where it's been here for the last 2 weeks. And if it gaps down today, and the gap would have to be below 83. If it gaps below 83 and doesn't fill that gap, woo, that's payday. I mean, that's going to be a monster move. I mean, the risk reward on that would be 3 points on the upside, and you could get 15, 20, or even 30 points on this on the downside. And that's just what it looks like. I mean, it's the objective on this would be the 2017 low, which would be 55. So that's a 30-point handle with a risk of about $3. But it's got a gap below 80. It's got a gap down today, and then not fill that gap. If it fills that gap, it takes this pattern away, and so it's going to be close. And we'll follow this tomorrow. But that's one of those ones that you want to be able to do, pretty easily. So that's the main thing that we have going on here, folks. I had something really exciting happen. As you know, I have all my friends are in California from the old Drexel days, and many of them are horse players, and they go down to Del Mar because this is the second part of the season for them. It ends right after Thanksgiving, and we bet a superfecta. In other words, you have to pick 4 horses finishing 1, 2, 3, and 4, which is really hard to do. But what you do is you box the horses so that you get several chances. So we split a $120 ticket 3 ways, $40 a piece, and we hit three of the 4. Unfortunately, the second horse didn't get in. But if we hit 3 of the 4, the winning ticket, folks, The winning ticket paid $153,000 for a $120 ticket. Now that is leverage, but that's the closest I've ever come to a really big win. But it was rather exciting, and we just missed it. But it was fun anyway. By the way, this is we're still celebrating Veterans Day, so if you get a chance to help any veteran, please do that. I always take veterans as students, no charge. In fact, the government actually has a program that will pay me the money to train them, and I give the money back to the student for his account. But that's one good thing that the government has done in the past. Haven't had many, but I've had some, and it's not many people have an interest in trading because it does get quite boring at certain times. So we'll see how that goes. We're almost halftime right now. Okay, 877-927-6648. When we get back, we're going to talk a little bit more. I want to talk about the gold market, and we want to talk about the crude oil market.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've got a request to take a look at some of the grains. I put the wheat chart in there. As you can see, we just completed an ABCD pattern coming off of that big 3 drive that we had down there at the 419. The low was 416. We're down about 4 or 5 cents tonight and Monday morning. So my guess is that we're probably going to go a little bit lower. Be a low risk buy down here at around 424. But I frankly would like to wait a little bit. And the reason for that is is that the corn market has gone down and made new lows. It's still very, very close to the 341, 342. 340 is the old low, and that is right near the cost of production in the corn. But if we take a look at the January beans, which is lead contract now, you'll notice that we've broken below the channel line, and we've got several, price objectives about 20 cents lower, down at the 61% retracement level of the solar eclipse back on August the 15th. And my guess is that probably sometime early next week would be a time to maybe look at this when this pattern completes. But right now, I think the beans will probably pull down the wheat. Now, Minneapolis wheat has still held up relatively well off of the bottom, but frankly, the others are just not doing it too well. Let's just give you an example here of the Christmas corn, folks. You'll see this is the long-term weekly chart on corn. You notice that we've got some prices just below where we're trading now, around 343, around another nickel lower. You want to take a look at that. So I would wait a little bit on that, but we are close, I think, to a bottom. What we've done since August has made a lower lows and lower highs, so we haven't made the final low end, but this is how it's made. So we're watching it, but right now I can't really do much with it. Remember, we got this new moon coming up here on the 16th, and that's going to be a big one. So that's when I would be watching to buy the wheat and the corn and the beans, and I'd like to see it, get to those levels, and that'll give us a better chance of telling us, whether this is going to be correct or not. The Minneapolis wheat has held up much better than any of the other contracts. You'll notice here in the Minneapolis, look how many times we stayed at the 78% retracement, folks, for well over 5 weeks. It wouldn't go below it. That's telling you, how important that price is on Minneapolis wheat. Oh, we got a caller here from Philadelphia. John, are you there?
Good morning, Larry. Good to speak to you, sir. Looking forward to that John Jameson webinar.
He's John. I wish you could meet him in person, because everybody likes him, but he's just a super nice guy, and boy, he really knows his stuff. What can I do for you, my friend?
First, wanted to ask you about the bond futures markets.
Sure.
You've addressed the stocks pretty thoroughly with the DAX and the S&P, but moving over to the bonds, we've come off. Is there anything that you're seeing that suggests a big move, either up or down coming, or you're seeing just smaller moves? And that's frankly the only thing I see, hence my reason for calling and asking.
Well, John, there's two things that I see. I posted the daily Treasury bond chart, and you'll notice here that when we got up to that one right near the 155 level, we had a 20-minute line there. We were right at a 50% retracement. But what's happened in those 3 days since that occurred, you'll notice that we had the really big down day on Friday. And, we're right at a 61% retracement off of the low from October the 23rd. But this is so bearish, John, that I have to actually control my emotion, because if you'll take a look at the long-term weekly chart here on bonds, bonds actually topped, way back in, March of 2016. And all we did during 2017 was make a 382 retracement. And now we're breaking down. I mean, this is not a good sign. And not only that, if you look at what's happening with the high grade, the junk bonds, high grade, high yield, this is not a good sign for the bond market. I know you hear the guys on TV saying, oh, don't worry about it, we're going to have low rates forever. Well, our rates have been going higher for a year and a half, but they don't acknowledge that, because, we have quantitative easing, and that's what makes it different. But look what's happened to the high yield market, and you'll see that this market is really starting to, drop quite a bit. And it also had that beautiful head and shoulders pattern up there, in the middle of September. So this tells us that this market certainly looks like it wants to go lower. And John, just between you and me, the real kicker for me is that the Chinese banks, and these are the 10 biggest banks in the world, I believe 5 of them are from China. All of a sudden they said, you know what? you folks from the United States can come in and own a 51% ownership of our banks. Now, isn't that nice of them to do that, John?
Boy, how nice. When the banks need some capital, ask for help from some foreigners. Absolutely.
Yeah. That's that to me is it's just not. I remember, if you remember when Blackstone came as a IPO. Oh my gosh, it was about 2007 or no, it was 2005, I think. Yeah, 2005 or 2006. They said, "Oh, we're going to bring out a stock," and I was working as a consultant for someone, and I told them, I said, "This is a joke." I mean, the pattern said that, they're just bringing this out, and of course the thing came out and it hyped it for one day, and then it dropped by 2/3. And, but you got to be careful when the old adage is, if it looks like it's too good to be true, be careful. But all of a sudden, after all this time, they're going to give us a chance to buy 51% stakes in their banks. And there's rumor that they have some serious troubles over there, but that's only rumors. That I don't know.
So, thanks very much for that on the bond futures and the high yield, the junk bond ETF. Wanted to switch topics. Would you entertain a question or two from me about John Jameson's background,
Sure.
just as a prelude to his webinar?
Yeah, he's 53 years old. He's been doing this ever since he was in college 30 years ago. He's from the UK. He has several different homes, and he's lived in Perth for quite a while. I've known him for 15 years. He's extremely well written. His main passion in life is Renaissance art, but he's a computer expert. He really understands how software and hardware works. I mean, just one of those. And not only that, but he can communicate it like you and I, John. I mean, it's not like he talks in riddles and stuff. He just really understands.
So he was a software programming and software architecture specialist before he ever began trading. Is that?
Oh yes,
do I got that correct?
Yes. He made his money on the internet because he could see things happening, that were very important, and then he became a consultant to some very, very large firms that have single or triple digit, like IBM was one of them. And anyway, that's what he did. And then later on, about 16 years ago, I met him. He wanted to learn Forex trading because he knew that was going to be exciting. And he's done that, and he does a good job. He's very good at that. But he came over here and spent some time with me several different times. But he's just very, very smart. And not only, some smart guys, they can't order a baked potato. But this guy's smart, and he can talk your language, and that's what's so fun about it.
Terrific.
Okay?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I've had a couple interesting questions here during the break. One is, what is the difference between a junk bond and a high yield bond? And there is no difference. What happened is in 1974, after graduating from as an MBA from Wharton School of Business, Mike Milken got a job at a Wall Street firm called Drexel Burnham Lambert and pitched him on the way to make junk bonds high yield bonds, and this gave them, some little bit of leverage, and they became the junk bond kings. Remember, in fact, when he brought this out in the 70s, folks, it was very difficult to get financing for these young startup companies because interest rates were, T-bills got to 13% in 1980, so interest rates were exorbitant, and so if you could bring a bond out with, with a high yield. It made it sound better, and that's, junk is not a good word, So that was basically what he did. He changed the name between junk bonds and high yield bonds, and he really did not like the moniker of the junk bond king. He really didn't like that very much at all. And so I happen to work for them, so I know that. But that's the main difference. Another question they have is about the Bitcoin. The Bitcoin is basically the guy that started it gave it. He gets an open source code. Oh, here we get into technical stuff. I don't want to do this. It's an open source code that anybody can do it. The problem is, in order to do Bitcoin, you have to have millions and millions of dollars with computers that are so powerful that you just cannot believe. This is where the mining comes in. This is all new stuff, folks. This is the internet 25 years early. So if you get a chance to watch this thing, I would really suggest that you, take a look at it. It's basically, something, pretty interesting. Now, the market has held that Gartley pattern in the Dow Jones. We've now rallied about 50 points off of the bottom. If we go below that 23,280 now, that would be a failure in that Gartley, and then you'd want to be able to see, what's going on. If you guys want a really great book about junk bonds and Milken and Drexel Burnham Lambert, it's called The Den of Thieves. Oh, James Stewart, I believe, is the article. It's, you don't want to buy the one Predator's Ball because actually Milken, he paid for that one himself. He ghosted that one through an author. He wanted to get his point across. But the Den of Thieves is how it actually happened and what happened with it and all the other stuff. So that's the main thing, to keep in mind as we see that. Yeah, that's Satoshi Nakamoto. That is no one knows exactly who it is, but that's the pseudonym that he used, and that's why they call it Satoshi. And these things are, the minimum, Satoshi is 1/1,000,000th of a penny. And anyway, this is all covered in his webinar. You'll enjoy it very much. And I think you'll know. He knows the stuff, believe me. It's he flat out understands it. But anyway, I think it's going to be great. I've seen it several times. I enjoy it. I highly recommend it because it's something new. And, it's right after, I talked to Al Gore right after he discovered the internet, and I had a little difficult time understanding what it was all about. But once Al explained it to me, I knew that it was a pretty good thing. The natural gas, I believe let's just pull the chart up for natural gas, and you'll see it here because it doesn't look like a very, very positive. Let me just show you why. Let's get this up here. I think if you want to buy it, you want to wait for a little bit of a pullback. But you'll notice that we've got some really strong resistance up here, just a little bit higher. You want to buy it if you can get it maybe a 382 back into that gap area, down about 15 or 20 cents. Then I would take a look at it. But right now, I couldn't touch the natural gas from this level. I don't even know what it's doing today because I'm not following that. But, it will be related to some of the cold weather that's starting to come in. And, of course, we'll notice what that does to all these seasonal things in this. But that's what we're watching. Let's keep an eye on the prize, folks. That is the bond market. I think we're going to go a whole lot lower. Watch for a rally in those bonds. If we can get about a 1 to 1.5 point rally in those bonds, I would think that would be a really good spot to take a look at it from the short side. So those are just the one that I'm, following very, very closely, along with the U.S. dollar. And, I follow about 12 different things, but it's very interesting where we have right now. This is the first time we've had any type of a down move in some of these things. In the Russell, we've been down for just about a month, and no one's talked about it very much, but it topped back on October the 15th, which was 28 days ago. So, some of these markets have actually, turned lower. That's the main thing. Yes, Ben Stein, I know Ben very, very well. I traded an account for Ben in the British pound and did quite well for him several years ago. He's a super nice guy, and his dad was a super nice guy too. Ben lives in Malibu, and boy, he's one smart cookie. Boy, you don't want to get him in a game with Scrabble or anything like that, because boy, that guy's really smart. He's really unbelievable to see. Okay, that's pretty much you're correct here. I don't know if, well, anyway, let's get back to some of these other things that we want to look at. Who had a question? Oh, the banking index. We had a question about the banking index. We'll take a look here. And we've had a nice ABCD pattern complete about a week ago. I'll cover crude in just a second, and I'm going to cover crude right now because I think crude is in a spot where we have to pay really close attention to it, folks. Let's just get this up here. We've completed all of the ABCD patterns here of the recent move from June. They're all completed. We made a 1.27 of the high in December. We made a 1.414 of the high in March. And then you can see the ABCD patterns completing right now at this 50, almost 58, 57, 80, I believe, was the place to look at it. So we're doing the same thing with heating oil, too. Heating oil has done exactly the same thing, only it's a tiny bit weaker over the past 5 or 6 days than the crude oil. And that's unusual because there's really cold weather coming in from that upper northwest weather front that's coming in. So if this doesn't materialize, it could be pretty much interesting what's going on. But if we do get natural gas above that 320, 330 level, boy, that thing could really go a long way. That's for sure, because we've got that big gap up telling you that something different happened. You want to be a buyer of that stuff. So not a seller, that would be my guess, is to wait to see the pullback to see if it's going to do that. Let's get here. We've only got another minute or so till we get to the gold and the silver. And I want to bring this gold up here. This is the chart of the gold for a daily chart. This is what I think is happening in gold. I'm not 100% sure, as always. I'm not even ivory soap sure. But anyway, if you'll notice here that we had that 382 retracement in early October. Since that time, we've hugged the 61% retracement quite a few times. If we get below that 1265 level, that sets up another $60 move down to around the 1200 level, which is the 61% retracement of the move from December. Folks, pay attention to that move in December. That was a really big 3 drive that was forming there, And we also have one that happened in December of 2016, if you remember, at 1,030. So we want to watch that one really closely. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're starting a little bit. We're getting back to being up a little bit in the market, which is a good sign for all the bulls. We did hold that really key level down there, of course, at that 23,280, which was a 78% retracement on the Gartley. And that would have been your first profit objective. It's rallied more than 60 Dow points. So we'll see if that's going to be the case. And that's really what we're looking at. So if we'll just follow that, if we get below that 23,280 now, then you're going to be looking at something a little bit more serious. You know what I mean? That's pretty much it. Anyway, that's what we're really, and it's really quite exciting here, folks, because, you know, we do have this new moon coming up here on the 16th, and there's always a possibility we could continue rallying here in the market and see even higher prices, but we'll wait and see what this rally is coming off here. Regarding the bonds, you know, we're down still down on the day. We hit an overnight low of right around 152. We were able to rally almost a full handle, hasn't even done very much there, but I'd really kind of watch that one for a personal place to get short if we get the 382 retracement on that bond move. That bond move on the long-term weeklies and the long-term dailies looks about as bad as any chart that I've seen. It's really quite a bad chart as we go through here. Anyway, okay, that's fine. And if you'll give me a second here, I got to do one other thing, and that is, give me 1 second. Someone's asked a quick question. I hope we can get it done before the end of the break. And that is about the, where is it? Silver market. Let me get it up here. You notice the silver right here. I still think we're heading lower in silver, down about another buck. There's just too many nice patterns that fit in at that time, and has a really strong seasonal tendency, to do that. Anyway, that's it. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!